Good evening. Do you hear me now? Yeah, but now it seems like I cannot show you my screen. Very annoying. Let me see if I can show my screen. Still, I cannot show you my screen. I don't know why. Now there is sound, but I cannot share the screen. Very annoying. I don't know what happened with the program. Let me try another restart, and then we will see what will happen. Now there is sound, but you see there is not an option to share my screen. So I will pause the recording. We can also start recording. Welcome again to Admiral Markets webinar. Yeah, we had some technical difficulties, as you see, but we are fighters and we have successfully battled through those technical difficulties. Okay, prior to presentation, I won't be long. I will tell you a disclaimer, then we can start about new setups. Online educational materials are developed by Admiral Markets AS Estonia for a global audience. Therefore, please take into consideration that the information in this session may not be suitable for everyone. To get a corresponding information on charting conditions and any other detail, please visit www.admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Yeah, risk disclosure statement stating all the possible risks associated with Forex market. By proceeding further, you are accepting all the risks associated with Forex market. Admiral Markets UK Ltd takes no responsibility for the information accuracy. The analysis represents the personal opinion of the author, it's me, and in no way it represents the actual suggestion for the trade. These are not AMUK's opinions, and the website in the video is not .co.uk website, but the globally used .com website. Forex is risky business. This should be not taken as advice. Personal opinion only. This webinar is informational and educational purposes only. With having said that, we have already seen 14th of April 2014 session recap results. I won't go through these slides again because it will take you time and you needed to wait for me to restart my computer. So after this, I will show you this week's setups. Last week's setups, everything you can of course test everything. You can test it. Euro dollar alternative position qualified on 16 on April 2 p.m. platform time gave us plus 42 pips potential. It was a nice trade for alternative position sell. Then GBP dollar position sell target hit was activated during live webinar. If you remember when we had webinar last time, I told you that I'm in the position, so it was up to you whether you would take the trade or not, but eventually the trade was good for 85 pips. That was the trade of the week. Australian dollar position buy activated trade was at 1 a.m. 14 2014 platform time. Basically it hit stop loss for only 30 pips. Aussie Swiss position buy trade was activated at 9 o'clock 15 of April 2014 platform time, and basically it went either for plus 20 or minus 30. If you close it anywhere from plus 1 to plus 20, you would have got that number of pips. Or if you didn't close it plus 20, if you didn't use trailing stop, the trade subsequently reversed and went to hit stop loss. So it could have been either this or this. Euro Japanese yen, unfortunately stop loss was hit, but only 30 pips. And dollar CAD position sell trade was activated on 15th of April at 16:15 or 4:15 p.m. It was for good for plus 35 pips. So anywhere the pip pool was around 140 to 205 pips, and these were all setups which were activated after our webinar, or this one was activated during the webinar, but it was a trade of the week. So what I see for this week is this: euro dollar is possibly in a downtrend. This is what I've been waiting for, but unfortunately 37.80 it hasn't broken out yet, and I'm still waiting for that potential setup. This is what I was waiting for, basically, at what I've been waiting for. I want this 37.80 to break. You see, even on 4-hour time frame, you can see the level what will happen after this level possibly breaks out? I think that it will go to test 37.20 and 37.00. Of course, we can also see that this can be also a bullish wedge here. If you connect these bottoms there, and if you even connect this trend line here, it's a sort of the triangle, but still it might form a wedge around there, and it might jump off this level. So you need to pay attention to this upper trend line. This is also visible on 1 hour chart. You can see on 1 hour chart, it's still in the range. So I would personally want to see the break of this range. If this range breaks out to the downside, just open your 4 hour time frame. It's logical. If this spinning top is broken and the spinning top low is standing right at 37.79, I would call it 37.70, 37.70, 75. But I really, let's say it's a sell around 37.80, but it's breakout pullback continuation. So eventually it will be breakout pullback continuation, and possibly the sell will come around at 37.75 or 37.70 because of the pattern. You know what the pattern is: breakout pullback continuation, breakout pullback continuation. If that happens, BPC pattern below the level, I think that it will go to test 37.20 to 37.00. Why 37.20? Look at this. One rejection, strong rejection here, history of buyers. Then we have peaks, 1, 2 peaks, again history of buying there. So I think that it might come to test 37.20 if we get this 37.80 breakout pullback continuation. Now, breakout pullback continuation, you know how the pattern is traded, you know how you can trade it. You just need to wait for the breakout and retest, then continuation in bearish direction. So if that happens, I think it will go down. 37.20, 37.00. Now, alternative scenario is buy around 37.00, stop loss 25 pips, targeting 37.40. 37.40 is also a very important level on the chart. You can see it also on your charts. You can see multiple rejections of 37.40. So also if you go into sell of 37.80 breakout pullback continuation, try to pay attention on 37.40 before proceeding to 37.20 and 37.00. Also important to know is that once it hits 37.00, I guess that there are many buy orders there, so we might get a nice scalp trade around 37.00, or at least scalp swing trade. 37.85, if it doesn't get broken, that bullish wedge can reject the price towards 38.50. So it needs to get broken. If it doesn't get broken, the level, it might form a nice, again, a nice bullish wedge and eventually break out of the trend line, which is holding the price now, and go to test 38.50 again. So pay attention to this outer trend line, which marks the resistance. So this looks like a triangle, but it more looks like a sort of a bearish wedge now. A bullish wedge at this moment. What about cable? Cable is also, for me, cable is very, very nasty pair to trade, but last week we have a great success with cable. Now I see it also buy. I would look for a buy around 67.50 to 40. Why there? Because you can see 67.50 to 40 is the region where also L5, this is L5 region, but pay attention to 50% of a fib retracement. 50% of a fib retracement is important also because we have also history of sellers here and history of buyers there. Because once it was rejected at 67.50 before it broke out to the upside. After the breakout on 1 hour time frame, it wasn't tested. You can clearly see it here on the chart that 67.50, once it was broken to the upside, it wasn't tested. So basically what happened is it broke here, but it wasn't retested. It was a direct jump to this level, 68.17, 18. So it was a direct jump there, and I guess if cable can retrace to this level, I guess it can be good for a long entry. Anywhere from 67.50 to 67.40, it can be good for a long entry. I think it might happen, and I would like to see that. Also, if we don't get a buy trade around 68.20, 25 pip trailing stop, we can get a sell trade. A sell trade, because you can see the reactions around those levels. The reactions are pretty strong. Look at this double top, triple top, quadruple top. Okay, pay attention to this quadruple top here. 1, 2, 3, 4. So basically, if it gets there, the first rejection could be a sell. So a sell there or a buy there, we are waiting for that setup. Then let's see Aussie. Basically, it's ranging on 4 hour, but downtrending on 1 hour. It's basically ranging. It looks like it might start the uptrend, but it's downtrending on 1 hour. So I would like to see sell position 93.55 to 50. 93.55 to 50. This is basically, this is a wrong template. Now I will give you a right template. This is Aussie. When I restarted this, I lost all of my templates which I prepared for the session, but never mind. 93.55. 93.55 is close to the level. I will go to 1 hour chart and show you what I see here. 93.55 level. Look at this. Again, multiple rejection of that level, and it looks like it might go there. But look, this level was broken, and basically this is uptrend, and when this trend line was broken, you can see it here clearly. You can see it here, a retest. This is breakout, retest, pullback, breakout, pullback, continuation. So this is the scholastic example of breakout, pullback, continuation pattern, which you can also use for euro dollar. For any one of you who don't know what breakout, pullback, continuation is, this is breakout. Look at this, level breakout and a red line confluence. Breakout, this is pullback to retest the level, 93.55, and then continuation. This is breakout, pullback, this is retest, continuation, and this is breakout, pullback, continuation. So this pattern can be traded on 2 ways. This is breakout, pullback, you can short it there, and continuation once it breaks to this point. Once, I'm checking the sound. Do you hear me? Because I get again that there is no sound. Just type podcast. Yeah, that's problem. Okay, great. So you do see sometimes PC can really get in our way, but it doesn't matter. Now everything is okay, sold out. So breakout, pullback, continuation. You can trade it 2 ways. If it breaks out to the downside, you wait for the pullback. Pullback is clearly depicted in my analysis and in charts, because 93.55 is important level. This is pullback to the level, and you can sell it there, or you can wait for the continuation. Continuation is usually 2 pips below breakout level. If this candle was a breakout candle, this candle, after this I will mark it like this. So if this candle is a breakout candle, 2 pips below breakout candle is continuation. Continuation always comes after the retest. So you can trade the actual retest at the confluence point, or you can trade the continuation point. That is important for you for this euro dollar trade. If this gets broken, you wait for the pullback to either sell it there, or continuation to sell 2 pips below the breakout point. So the scenario for this trade is this: sell at 93.55.50, stop loss 30 pips, targeting 93.00. If it happens to come at 93.10 to 93.00, you can try a long trade. So first, concentrate on a possible short, because it already gave us a history of selling. If it doesn't happen, if we don't get, because you can see that these last 2-3 days the market was very slow, it is because of the Eastern. And again, I wish you happy Eastern this time. If you didn't follow my my happy Eastern on Twitter and on Facebook page, so I wish you now. So starting from tomorrow, we should get a good volatility again. So I expect currencies to move. So this is sell point for me. Around this level should be a buy point. It has a history, and you can see it here. There is a sort of W pattern. This is W, bullish pattern. So the first thing is I would like to see there, but if you don't get the trade, I would like to see it also there. Okay, so let's see what will happen first. Always use trailing stop, especially after these slow volatility days, low volatility days. Use trailing stop because volatility can be high. There will be a lot of buyers and a lot of sellers on each side, so use trailing stop. After 10, 15 pips, use it and secure the profits. Usually the first touch will be the most successful one, and you will get your profits. Market plan on GBP New Zealand. GBP New Zealand, very interesting pair. I will show you now GBP New Zealand. This is GBP New Zealand. Look at this. This is very, very strong uptrend. Now, if we get the last, let's see, I will put a Fibonacci here, but unfortunately this level has been broken, so this can extend a bit, but I wrote it there. Breakout pullback continuation sell around 95.70, targeting 95.25. Why sell if it's an uptrend? Because in that case we will see a nice counter trend trade. Look at this, very, very easy to see the confluence between this level here, which is basically 95.73, then a trend line, and 50% of a fib of, let's say the swing is still in a process. But even though if it closes higher, then again it will be some sort of Fibonacci confluence with a trend line and the previous low. So this is previous low. You can treat it also. You can draw a Fibonacci here, from here or there. I don't know where it will end up. But still, this is hammer. This is important level. This is a trend line. This is called in traders world, this is called a pin bar. So pin bar there. You look at this bullish hammer, 95.70, 50% Fibonacci. If it goes below the level, look at this. It will form M pattern also. M. It's bearish pattern. I will look to sell it. Anywhere from 95.70, I would look to sell GBP New Zealand. So I would wait there, breakout, pullback continuation to test 95.20 again, and possibly if this level gets broken, we might see a continuation to even 94.75. But first, let's concentrate on a possible sell if it happens. I think that this can be a great trade if it happens. But what if it doesn't happen? If it doesn't happen, again, I will buy at 96.25, targeting 97. Why? Because look at this. It's very close now to break this 96.20. It's a buy if it breaks out, pulls back, retests the level, and continues in the same direction. Then we can talk about breakout, pullback, continuation, buy trade. So let's see whether the price will break out, pullback, continue, or it will drop down and then give us trade here. So be prepared for those setups if you will trade GBP New Zealand. And of course, dollar CAD uptrend now, buy around 1.000 to 1.09095, stop loss 35 pips, targeting 1.050. You will see it here. Let's see. I think I need to, again, I lost it now, but don't worry, I will put it here. So dollar CAD, let me pause the screen, and again I will use the template. Dollar CAD, this is clearly buy for me for dollar CAD, but you can see it here. 4-hour time frame. Ascending flat top triangle. Ascending flat top triangle in price action is a sign of a continuation. Okay? It's a sign of a continuation to the upside. Now, that will give me chances to trade it around 0.9095. So let's see it on 1 hour time frame. You can also, it doesn't need to be perfect now just for showcase purposes, but you see basically the structure of it. This looks, it's not perfect, but it's still ascending flat top triangle. So I would look to buy, of course, around this zone. Look at this. Multiple rejections of the zone. Multiple rejections. Now, look at this. So it still makes a confluence between this level, 1.9970, or I can say it's 1.000. It's only 3 pips from the 50% of retracement, but it's still, even if you neglect this triangle, if you neglect the triangle, because if it breaks it down, it can be like this. It will still be a flat top ascending triangle. So it's too high for me to buy it. I don't say that it necessarily will come down. It might go up from this point, but I'm paying attention to the possible buy here around 50 retracement and this buy zone. This is clearly buy zone. Look at these rejections. 1, 2, 3, 4, 5, 6, 7. 7 rejections of this confluence between this blue level and 50% of the retracement of the last swing, the high swing. So this will be a buy setup for me if it gets down. I don't see alternative now because it might get up also, but you see I can see a multiple pins, 1, 2, 3, 4 pins. So I wouldn't necessarily buy there. I would still prefer a nice pullback to this zone, and then if it pulls back, then we might get a buy trade. So pay attention to these slides again, and we will see what will happen soon. Also pay attention to Admiral Markets blog and Forex Factory Spiders Den, because starting from tomorrow I may update some of these trades. If I see that the other opportunity has arisen, I will of course notify you through Forex Factory Spiders Den, Twitter, and Admiral Markets blog. But pay attention to this. These are real-time setups. The market was not very volatile. We had Eastern, so basically anything can happen. It's very hard to make analysis after the holidays because, you know, there wasn't a big price action. But based on the information I have, these are my setups. And pay attention to Admiral Markets blog and Forex Factory for possible updates tomorrow. But until I update it, those are valid. Those are valid for 3 days or until I update the analysis. So Euro, Cable, Australian dollar, GBP New Zealand, okay, GBP New Zealand, and dollar CAD. So we will see what will happen, what might happen potentially. As I say, guys, always pay attention to Admiral Markets blog, Forex Factory Spiders Den, because we need to watch for those setups. Nothing, you see, holidays, all day holidays, Swiss holiday, German bank holiday, Italian holiday, French holiday, bank holiday, the USA worked, but it was not, it's still a holiday. So pay attention to possible updates of the analysis. Admiral Markets blog, Forex Factory, and my Twitter account. So these are current setups I would like to trade, and I will trade. And as always, pay attention to this because every week we have more than 100 pips of potential trades. Even though if you make 20, 30 of those pips pool, you're still good because you made 90-30% of it all. So all of those setups are, all of those session recaps are setups also. So this is how I see it and how I will trade it. But as you know, if I see the new opportunity, I will update the analysis. Would people be in a hurry to get into trades tomorrow? Well, tomorrow will be a volatile day, I guess. It should be a movement because after it's a holiday, and we also need to check the calendar if there will be any important news. Let's see, tomorrow we have existing home sales. Yeah, there will be movements. You can trade tomorrow. Why? Because look at this. April 23rd, very important. Euro German flash manufacturing. So try to use trailing stop when you trade because market will wait for April 23rd. GBP news, Euro news, and dollar news again. Also New Zealand, there will be volatility. So tomorrow you can get into trades, but use trailing stop and secure 15 pips of profit at least, okay? Because the market will move, but it will still move a bit more on Wednesday because there will be many news to come, okay? So pay attention to this and try to use lower level leverage and of course stop loss. As you can see, stops are usually around 30 pips, so it's very safe to trade. Multiple setups can happen here, so use this information. So thank you guys for attending the webinar. I still I can say thank you for your patience because we had technical difficulties during the first 10 minutes of the webinar, but fortunately now everything has been solved and everything has been all right. So thank you for attending the webinar. I will see you very soon. And yeah, it's always worth the wait, of course. Thank you. So pay attention to my updates, possible updates of the trades tomorrow. But if you don't see any updates, that means that they're still valid. Thank you and talk to you very soon. Cheers.